Hello everybody, Carl Keister here with ClearServe Financial Education, and today I'm going to be doing a video on the top 5 things that affect your credit score. So this is something people always wonder about: what affects your credit score, what does not. So we're going to go through those 5 main factors, and if you haven't done so, please hit the like button, and we're going to jump right in. So the number one thing that affects your credit score is payment history. So what this is that the companies like FICO or VantageScore, they will go out and they will look at what is your payment history. Are you paying your bills on time or not? Now this is important because this is 35% of your credit score, and I've seen this from multiple agencies, roughly around 35%. So the major bureaus, Equifax, TransUnion, and Experian, they're the companies that gather this information, and they want to see if you're making those payments on time. So especially when it comes to student loans, mortgage, car payments, credit cards, that's the big 4. As far as utilities, utilities and phone bills, those things don't really come into play unless you don't pay it, you fall a couple months behind. Then if it gets turned over to collections, then it does play a role. So the number 2 is the amount of debt. So the amount of debt you have is the credit utilization ratio, and what this means is the outstanding debt you have divided by your credit limits. So they want to see that around 30% or less. So each individual card shouldn't carry more than 30% of your outstanding debt, or it could pull that down a little bit. So if you got a $10,000 credit card, you want to keep less than $3,000 per month on there. And if you're in a position, hopefully you can pay it off each month. That's the best thing to do, is pay it off every month. You don't pay any interest, and it's also going to keep your credit score very strong. Now, number 3 is going to be credit age or credit history. This accounts for 15% of your credit score. Now, the 2 things they look for is the age of your oldest credit card. So whatever card you've had the longest, that's very important. And also look at the combined average of all your cards. So we'll take all the cards, add them up, how long you've had them, divide by the denominator, the number of cards, and they'll come up with a percent. So they don't really break that down what that is, but they just say that they do keep an eye on that. So in other words, you don't want to get rid of your oldest card and pick up a new card all the time or every other year. That could actually pull your score down. So you want to keep control of those older cards. Now, number 4 is going to be account mix. This is only 10%, but it is still something that they look at. And what that means is they want to look at the amount of credit cards you have versus the loans. And we'll see later on how that comes into play if you pay off a loan early. We'll talk about that a little bit towards the end. But just to keep in mind, 10%, they do look at the amount of loans versus credit cards. Because credit cards you can run up any given month, where a car payment is steady or a loan is steady, and its terms are usually the same every month. Now, number 5 is going to be credit inquiries. Now, that's 10% of your score. Credit inquiries can either be a soft hit or a hard hit. Soft hit is just when you go into your bank or your credit card, sometimes they'll show FICO number, and so if you check that yourself or pull up your annualcreditreport.com, that's not going to pull down your score, but you just want to bear in mind that if you go apply for a new credit card, or you want to get 10% off or $50 off a new purchase because they're offering you a credit card to do it, that actually can pull your credit score down in the short term. So just something to keep in mind. And where I've had it come in to play myself is when you apply for a mortgage. The mortgage officers will tell you, don't apply for a new credit card, don't pay a car off, don't take out a new loan, just let everything status quo until you get that loan. Because if you're applying for a mortgage and you get a better rate, if you're in a good standing or excellent standing on that, you want to make sure you get the best rate possible. And if you apply for a loan, it could ding it and knock it down where they can't give you the best rate possible. So just something to keep in mind. Now, other things that a lot of people don't think about, and that is inaccuracies. You want to check your credit report because there could be some data entry on there, or someone's name or social security number was mixed, and there could be something on your report that shouldn't be there. So keep that in mind. Also, if you've got child support, if someone's behind on child support, that's considered debt. And if that agency turns that over, they can turn it over, and that will actually affect your credit score as well. So something to keep in mind. Other things that aren't talked about very much are parking tickets, medical bills, anything like that that can be turned over collections, you want to make sure that you get that taken care of. Even a membership, if it's hanging out there and you said you close your membership out, but they say if you don't pay because it's a partial month or whatever, just pay the partial month, whatever they're asking for, because you don't want to ruin your credit over $10 or $20 membership in this example. So just anything that could be turned over, you just want to get that off your slate and get rid of that. So, but just keep in mind. So, okay, so that's the basic 5. And you want to keep in mind, keep everything clean, check your credit score, and make your payments. And if you can't for some reason make a payment on time, contact the lender right away, whether it be the car company, especially now during COVID-19. I know when I go to log in to pay the car payment or a credit card, everyone's got COVID-19 things popping up right now that says, hey, if you contact them and you let them know you have a hardship case right now, they're going to work with you, just because we're in an extraordinary circumstance right now. So you're gonna get a little more leeway right now than you normally would. So if you think you're gonna fall behind or you do fall behind, contact them right away, because that's gonna be your best chance. You're gonna get some slack that way. If you let it go and you don't contact them and it just goes late, they're not gonna work with you as much. So anyway, this is just one example of what you can do to help your credit score. Keep in mind, I have created a course. You'll find information down below that helps you as far as budgeting, retirement planning, taxes. Goes into. I want you to go down and check that out for me. There's a link down below. A lot of information there that will help you. These examples I'm going to keep bringing to you on a regular basis, but in the course there's a lot more information. We go into a lot more detail. So until next time, please hit the like and subscribe button, and we'll see you on the next one. All right, take care.